One and all. Good afternoon, one and all, and warm welcome. The Directorate General of Taxpayer Services, DGTS, CBIC, Bangalore Zonal Unit, conducting various training programs for the benefit of the taxpayers. Today also we are conducting one such webinar to give more awareness to the taxpayers. We request all the trade associations to involve more women entrepreneurs in these types of webinars to get awareness in GST and customs matters. The Director General of Taxpayer Services, Bengaluru Zonal Unit, in association with Cochin Chamber of Commerce and Industry, CCC and I Kerala, Tumkuru District Chamber of Commerce and Industry, TDCCI, Tumkuru, Association of Tax Practitioners, ATP Kerala, Bengaluru Customs Agents Association Limited, BCHAAL, Bengaluru, Mangalore Customs Agents Association, MCHAA, Bangalore, invites you all to this webinar on the topic recent budgetary changes in customs and GST and overview. To presenting today's program, we have highly talented faculty from our department. Also, to make the question and answer session more effective, we have senior and experienced officers from the department. Before we start the program, I have some important announcements. Microphones of all the participants are muted to avoid in-between disturbances during webinar. At the end of the webinar, we have a question and answer session which will be attended by our expert panelists. So I request the audience to upload your queries in the chat box, which is open now, and the same will be noted and passed on to the expert panelist. The questions should be confined only to today's topic. Questions other than today's topic will not be entertained. I repeat, the questions should be confined only to today's topic. Now for the inaugural address, we have with us Ms. Rakshana IRS, Joint Director, DGTS BZU. I will request ma'am to address the gathering with the inaugural address. Over to you, madam. Madam, your voice is not audible.
Can you hear me now?
Yeah, ma'am.
A very good afternoon to everybody here. Today, we have a very interesting session. Every February, in the first week, all of us, the tax administrators and the taxpayers, look forward to the budget changes, which have kindly give me a second. There seems to be some issue with my. Hello. Am I audible?
Yes, ma'am, you are audible.
Yes. So every February first week is very important for everybody in the Ministry of Finance as well as all the taxpayers, because we look forward to all the budget changes. This document, the budget speech and the discussions around it give us the idea of what are the policy directives of the government of the day and what are the policy decisions that would be taking shape in making the economic landscape of our country. So let's focus the current session on the changes made in indirect taxes in this year's budget. A cursory reading of the budget documents gives everybody a simple idea that this budget is a highly taxpayer friendly budget that has come out. Both in terms of direct taxes and indirect taxes, the government has tried to put the baton in the hands of the consumers and the taxpayers instead of being the regulatory partner and investing a lot more on their end. So a lot of freedom, money and schemes and changes have been made. Let's hear from our panelists about these budgetary changes, and then we will look forward to the question and answers at the end of this session. Let's hope to make this engaging. And with that, I will hand it over back to Ebenezer.
Thank you, madam, for your warm inaugural address. For the nation's growth, the involvement of the trade and industry is most important. In today's program, as I have already mentioned, there are a number of dignitaries representing the trade bodies, and it is our privilege to hear from them. Today's topic is very important and very useful one. The topic speaker need more time to cover the entire topic, so I request the trade representatives to take 2 to 3 minutes for their guest speech to give more time to the topic speaker. Thank you. We have with us Sri Prakash Iyer, Managing Committee Member, CCC and I, Kerala. I request Sri Prakash Iyer to address the gathering. Sir, over to you, sir.
Good afternoon, everybody.
Good afternoon.
Ms. Rajana IRS, madam, and Sri Sabhabadi Hegde, sir, and my fellow speakers, MNC, sir. Very warm good afternoon. I think after this announcement of the what is that budget, most of the employees are very happy because the salary drawn people are benefited because of the increased amount on the limit on the taxes, income taxes. Similarly, what we are looking into is the export promotional activities. We have seen some of the budgetary amount like fixed for shipyards, development of shipyards, but we are not seen on the infrastructure development like port and other infrastructures. I don't know when it comes to in detail. When it comes to in detail, I think we'll have that. And Cochin Chamber of Commerce and Industry, along with the FICCI, has organized a budgetary meeting on Monday, and many members participated in that to hear about what are the benefits we are going to benefit out of this new budget. And Kerala government is also going to have a budget, tomorrow. They'll be presenting their budget tomorrow at the assembly. So I think overall the things looks fine, but we'll hear further from the on the webinar. We can hear on the topic of recent budgetary changes in customs and GST. So the customs section and GST will have an impact on the export and import and the overall development of the state and the country. So we hope for good. And thank you very much for the opportunity given to Cochin Chamber of Commerce and Industry to be part of this from the day one. And also the members will be, what I again requesting is that the participants should make use of the program because DGTS is organizing such a webinar, sparing their time, and many other partners also participating. So make use of the facilities, and as we said, they are facilitating the customs or DGTS. Everybody is facilitating us. So let us make use of it. Thank you. All the best.
Thank you, sir. Thank you. We have with us Sri P.R. Gurandwad, President, Taxation Committee, TDCCI, Tumkuru. I request Sri Gurandwad to address the gathering. Sorry, voice is not audible, sir.
No, it is audible.
Yeah, you are audible now. Yeah.
Good afternoon to distinguished speaker, Sri Amar Kumar Sinha, sir, Additional Director General, DGTS Bangalore Journal Unit, and also other speakers on the dais, and also today's presentation will be done by dignitaries. And today, myself, Mr. P.R. Kurandwad, recently I have taken over the president of the association just 2-3 weeks back. And as far as the chamber is concerned, we conduct many number of such programs to our members so that they get involved into the taxation matter, make themselves very easy to look after their tax matters. It is a number of seminars, more than 150 seminars we have conducted right through 2017, even prior to introduction of GST. Nowadays, it has become a routine matter for GST, but only we have to look after whenever changes are coming. These changes have to be again incorporated in our day-to-day working. This kind of seminars, whatever you have arranged it now, it is on the recent budgetary changes in customs and GST and overview. It is very important webinar you have arranged it. It will be very beneficial to our members. I have requested most of my members are also attending this one to take advantage of this one. I thank DGTS to have arranged such programs, and will be cooperating with you in due course of time for all your programs. Thank you, sir. Over to Mr. Abhijit, sir.
Thank you, sir.
Yeah.
We have with us Sri Babu Ganesh, State General Secretary, ATP Kerala. I request Sri Babu Ganesh to address the gathering. Babu Ganesh ji.
Hello, can you hear me?
Yeah, you are audible.
Sir, good evening to all. It is a privilege to be here today representing the Association of Tax Practitioners ATP Kerala in this insightful webinar organized by DGTS Bangalore Zonal Unit in association with ATP and other esteemed associations. At a time when tax laws are evolving rapidly and discussions like these are crucial in helping professionals like us stay updated and serve taxpayers more effectively. The union budget is not just about numbers, it is a roadmap for economic growth and compliance, facilitations, and policy directions. The recent budgetary changes in customs and GST have introduced key reforms aimed at simplifying procedures and enhancing trade facilitation and strengthening tax administration. We are fortunate to have with us Sri Vikas Kumar, Superintendent, CGST Commissionerate, who will provide an expert analysis to these changes, shedding us on their impact on businesses, compliance mechanisms, and revenue administration. His insights will certainly help us navigate the evolving tax landscape. I take this opportunity to express my sincere gratitude to DGTS Bangalore Zonal Unit for organizing this outreach program and fostering meaningful dialogue between tax administrators and practitioners. I also extend my appreciation to all the participation and their keen interest in staying updated with these crucial developments. Looking forward to an engaging session. Thank you all.
Thank you, sir. We have with us Sri Philip CC, President, MCHAA, Mangalore. I request Sri Philip to address the gathering. Sir, over to you.
Thank you, sir. Good afternoon. I hope I am audible.
Yeah, good afternoon. You are audible, sir.
Good afternoon to everybody. It's very nice to note that DGTS Bangalore is always ahead in organizing the webinars which are relevant to that particular time, especially today's subject, the budget, which is presented only a few days back. And now presenting the budget is one thing, but understanding the budget is and its changes and implications is very important to the taxpayer as well as any action, as well as everybody involved in this particular subject. So I appreciate DGTS for organizing this webinar, and we are expecting a beautiful section and hope the faculty will be explaining it properly in all the changes and expect the very best from the speakers. On behalf of Mangalore CHA Association, I congratulate and thank DGTS as well as all the participants and the faculties. Thank you very much. All the best.
Thank you, sir. Now we come to the main part of the program, and we are honored and privileged to have with us Sri Vikas Kumar, Superintendent, Mysuru CGST Commissionerate, as our faculty. He has a depth of knowledge in all the subjects of GST and customs. He has been kind enough to accept our request and readily agreed to do the presentation. Now I request Sri Vikas to start his presentation. Over to you, Vikas.
Thank you, sir. Good afternoon, everyone. I welcome all the trade associations and all the taxpayers and tax consultants and even our departmental officers to this webinar. So basically, every year budget brings out so many changes in indirect taxes as well as direct taxes. So direct taxes are making hypes this year, but still in direct taxes also there are so many changes that are to be covered, and so we'll take one by one. First we'll take up the customs and then GST and some changes in central excise and service tax also. Okay, so we'll start with customs. In customs we'll first take the legislative changes. So first major change is section 18. Section 18 is provisional assessment. So earlier in section 18, there was no time limit for finalizing the provisional assessment. Okay. Up to this date, the time limit was not given by the Act. So there was like huge pendency was there. There was no fixed time limit. Now this budget introduced a 2-year deadline. Okay, 2-year deadline is there. If we see the new section has been, new subsection 18(1)(b) has been inserted now. So this subsection, it says that the proper officer shall finalize the duty provisionally assessed within 2 years. These 2 years now they have inserted here. Okay, and it is further extendable by 1 year period if sufficient cause is shown for the reasons recorded in writing, and it is extendable by principal commissioner or commissioner of the customs. Okay. So now, what about the provisional assessment pending as on the date on which the final financial bill gets the assent of the Honorable President? In that case, it says that the said period of 2 years shall be reckoned from the date on which the bill gets assent from the President. Okay, from that date of assent, these 2 years will be reckoned. Okay, so next is time limit. Another one more subsection they have introduced, 1C. It says that there might be multiple reasons due to which the proper officer might not be able to assess that duty. Okay, in that case, there are 4 type of reasons are introduced here. Information sought by the authority outside India through a legal process. It takes time. Another, appeal in similar case of is pending with the Honorable Supreme Court or High Court or Appellate Tribunal, or any interim order of the stay has been issued, or the board has in similar matter issued specific directions, or importer or exporter has a pending application before the settlement commission or the interim board. We'll read about this interim board later, because settlement commission we all know. So in that case, the proper officer is bound to inform the importer or exporter concerned about the reasons for non-finalization of the provisional assessment. Okay, so this is the new subsection where the duty falls on the proper officer if due to these 4 or 5 reasons, if there is any delay in assessment of provisional assessment. In that case, the proper officer shall inform the importer or the exporter about the reasons why he is not able to finalize. And in that case, the time specified in subsection 1B, that is 2 years, it shall not apply from the date of provisional assessment, but it will apply from the date when such reason ceases to exist. Suppose there is one stay by the court. So when that stay is vacated, from that date, this 2 years will be counted. That is given under 18(1)(b). Okay. Now another new section is there, 18A. So this is very interesting section, and it's kind of trade relief only. It says that voluntary revision of entry post clearance. Earlier, I think you all are aware about section 149 of the Customs Act. It says when you file some documents before the clearance, you can make some amendment. If you read 149 on the screen, it is there. It says that after filing of documents, but before clearance, you can make some amendments, and that depends on the satisfaction of the customs officer, if he accepts it or not accept it. Now another option is given where the goods have been cleared, and now you come to know there are some changes required before the customs officer comes to know about that. So it's a kind of revision at your end. It's a kind of self-assessment part is given to you, where notwithstanding anything contained in section 149, it starts with the non-obstante clause about 149. 149 is gone because goods are cleared now. It says that the importer or exporter of the goods after clearance may revise an entry already made in relation to the goods in such form and manner that is prescribed, that will be prescribed. Okay. On revision of the entry, the importer exporter of goods self-assess the duty. Again, after clearance also, you self-assess the duty, you revise that entry, and after such self-assessment, if there is any duty short levied or not levied or short paid or not paid, the same may be paid voluntarily, okay, along with interest. Now there is no penalty. Okay, it is saying only with interest. If you find that there is duty paid in excess, in that case, it is saying that this revision itself is an application of refund. You can get the refund, and there is no separate application is required to file if you find out that after clearance also you have paid some excess duty. Okay, under 149, if there is such thing, then you need to file separate refund application. But it is revision. Here you are making a revision, and this revision itself is an application for the refund of duty excess paid. Okay. So if duty is short paid, you pay it along with interest, no penalty, because you are doing self-assessment here. The government is providing you the opportunity, okay, you self-assess and pay the tax along with interest. But if you think that you have paid excess duty, you can take a refund, and this revision itself is an application for that refund. Okay. Now another clause, this it says the proper officer may verify. See, proper officer may verify. There is no obligation on the officer. Okay, it says that he may verify the revised entry and self-assessment made by the importer or exporter. Select cases selected primarily on the basis of risk evaluation. See, in our customs, there is risk management is there. Okay, so on the risk evaluation, the customs officer may verify the revised entry or the self-assessment made by the taxpayer. And also he may reassess the duty leviable on such goods in cases where self-assessment is not done correctly. Suppose self-assessment is done and then proper officer may also may verify that, okay, this duty, whatever you have assessed, it is not correct, then he may reassess that. Okay. Then no revision of entries. See, there is restriction also in what cases where any audit is happening or search seizure hasn't happened, or cases where requiring refund where proper officer has reassessed the duty. Okay, or any other cases where the board, that is the enabling entry, that board may say that this so and so conditions are also there where this restriction of the revision is there. Okay, so how it is different from 149? 149 is before clearance. Okay, before clearance, if you are filing some document, in that case amendment.
Because, sorry to interrupt you, 149 also requires amendment after clearance. The difference is in 149 you can make a change only on the basis of documents that were already present at the time before the clearance of the goods. So normal amendment happens, as I'm sure the participants in the webinar would know, during the course of regular assessment. 149 amendment happens after clearance, but on the basis of documents that were available till the time of clearance. And this new section 18A has been presented, which allows the taxpayer to do voluntary revisions in the documents that they have submitted with customs post clearance. So I hope that part is clear. Sorry for the confusion. Vikas, please continue.
Okay. So now another major change is that Customs Central Excise and Service Tax Settlement Commission. Now this settlement commission is being abolished from 1/4/2025 onwards. Okay. So now what entity will take place of this settlement commission? Who will be the members? So that changes are made. So this settlement commission takes its power and everything comes from Central Excise Act section 31. Okay. So 31B of Central Excise Act enables this settlement commission, and from there in customs also this same provisions have been taken. So these provisions of this this settlement commission, so these operations will cease to exist from 1st April 2025. So to make these changes, and who will come in this place? In this place, section 127A definitions part has been amended. So in that case, in definition, settlement commission ke jagah pe one more interim board has been introduced. Okay, so that interim board will take place of this settlement commission, and then further like 127A, B, C, D, E, F, G, H, all these sections, there are the powers or how the procedures will take place for filing of application or deciding the cases. All these sections have been amended to change from settlement commission to interim board. But where this interim board is defined, that is under Central Excise Act. If you see, there is new act, new section 31A. This new section 31A has been inserted. So it talks about all the powers and who will be the members. So it says that the central government shall by notification constitute one or more interim boards for settlement in place of settlement commission. Okay, for the settlement of pending applications. This pending applications is also defined under that section of definitions, that is section 127A of Customs Act. Provided that on or from the date of constitution of the interim board, every pending application shall be dealt by it from the stage at which such pending application stood immediately before its constitution. Every interim board shall consist of 3 members, each being an officer of the rank of Chief Commissioner or above. So Chief Commissioner and above 3 members will be there, as may be nominated by the CBIC. Also, it says that a member of, if differ in opinion, then as per the majority, that opinion, the matter will be decided. So accordingly, in Central Excise Act also and in Customs Act also, the provisions related to Settlement Commission have been amended. Okay, so Settlement Commission is being substituted by interim board. So interim board may, how many members will be there, that is defined under section 31A. Now these were the legislative changes in Central Excise Act and Customs Act. Now we'll see GST Act. GST, there are like most of the amendments have been discussed in the recent council meeting. So those recommendations of the council meeting are being incorporated in the GST Act through the budget. Okay. So the first is ISD provisions. ISD provisions were also made mandatory in the last budget also. So in last Finance Act 2024, it was made mandatory from 1/4/25 onwards. This for distribution of ISD, where an entity has multiple presence in multiple states, so they are required to take ISD registration and then distribute the ITC. Okay, suppose there is a headquarter and he is having branch offices in different states. So basically, what is happening in case of services, inward services, services are provided to the branch offices and billed to head office. In that case, it is billed to head office, the credit is flowing to the head office. So now that head office, how it will distribute to the branch offices, this mechanism comes under ISD mechanism, that is Input Service Distributor mechanism. It is defined under section 20. But definition, there is a change in definition also. So earlier what happened when this ISD registration was made mandatory, that time there was no reference to IGST Act. CGST Act was amended, but there was no reference to IGST Act. So there was confusion among the trade that what if there is an ITC received under RCM from interstate supplies. So there was no clarification on that. So now to clarify it, the sections related to ISD have been amended now. So the first section is the definition itself has been amended. In the definition, this red portion, under subsection 3 or 4 of section 5 of IGST Act, that means the RCM credit of IGST can also be distributed by an input service distributor. So basically this is the crux, but the relevant changes have been made in definition and section 20, that is ISD mechanism. Okay. Now in the council meeting itself, and the circular was also issued regarding provision, supply provision for vouchers. So vouchers ke liye, recently the circular was issued and it was had in the council meeting also, that these are the taxability, that supply and taxability will not be there. So in that case now, when the vouchers have been, the vouchers are gone, so their provisions related provisions related to time of supply also are omitted. So section 12 and section 13 ka subsection 4 is omitted now. Now recently in one circular that it was decided that Delhi Development Authority is not a local authority. So there are changes in local definition of local authority, and there are two terms, local fund and municipal fund have been defined under definitions only. So under section 2 subsection 69, municipal local authority is defined. Okay, under local authority clause C, it says that a municipal committee, a Jilla Parishad, district board, or any other authority legally entitled to or entrusted by the central government or any state government with the control or management of municipal. This fund was not there, municipal or local fund, this was there. So now this fund word has been added, and after that one explanation has been added. It defines local fund also and municipal fund also. Local fund says that like local self-government discharging civic functions in related to panchayat areas. Panchayat areas they are calling local fund, and municipal fund they are saying related to metropolitan area. Okay, so based on these definitions, the circular clearly defines that Delhi Development Authority, that is DDA, is not a local authority. Now credit notes ke liye, earlier there was one provision that after credit note is issued, they are saying that provided that no reduction in output tax liability of supplier shall be permitted if the incidence of tax and interest on such supply has been passed on to any other person. So earlier, see, through this also we were saying that, okay, if a supplier is issuing credit note, he can reduce his liability. Earlier, in the last council meeting, one more circular was issued where it was said that under section 15(3)(b) also, if someone wants to reduce his value of supply, in that case, he has to make sure that his recipient has reversed that relevant ITC. Okay. Same credit note also, if a taxpayer is issuing credit note, so in that case, he has to make sure that his recipient has reversed that ITC. So now clear-cut provision they are giving here, that this earlier proviso is omitted and new proviso is inserted. It says that no reduction in output tax liability of supplier shall be permitted. So there are two things now. If input tax credit as is attributable to such credit note, if availed, has been reversed by the recipient. Okay, where the recipient is registered person. If he is not registered, then he has to check that incidence of tax on supply, such supply has been passed on to any other person. Okay, so in these two cases, earlier this clear-cut provision was not there for recipient to reversal of ITC. Now it is there. So earlier how it was being there, so we were taking section 16(2). 16(2) says that, see, if credit note is issued, that means either you have short received supply or some amount you have received. That means you are short paid. So 16(2) conditions are not satisfied. In that case also ITC reversal is required from your side. But now clear-cut provision is also given, and it is the supplier is duty bound now. He has to make sure that recipient has reversed that ITC. So how he will ensure that the recipient has reversed or not? So now, as you all are aware, this IMS has been introduced. So how IMS is going to help the supplier in that case? Suppose the supplier has issued a credit note. Now the recipient has the three options: accept, reject, or keep it pending. So now the supplier can see if the recipient has accepted it or rejected it or kept it pending. So if the recipient has accepted it, it is as good as reversal on the part of recipient, and supplier can say that now the recipient has accepted it, it will go and sit in his 2B, and 2B will make sure that up to that much of credit is to be reversed or to be net of taken. Okay. So this IMS is going to help, because earlier there was like people were worried that how we can do the job of the other person also, how we are supposed to do our work and the recipient's job. Now the government is making it clear through the introduction of IMS, and separate provisions have been also introduced. So through IMS, the supplier also can track that if recipient has accepted or not accepted. So if the recipient has accepted, that means he has reversed, because after acceptance it will go and sit in GSTR 2B. Now 2B is not an auto populated, it will be generated through accepted or rejected or keep pending the actions of the taxpayer on IMS. So now in 2B, if credit note is accepted, so it is as good as reversed. Now another major change is in section 17(5)(d). Earlier there was a word or, plant or machinery, and now it has been changed to plant and machinery. And it comes from where I think all of you are aware that Safari retreats case. From there, the court, this major confusion was on this or and on or and word. Okay. So now from there, from that case, the government has taken cognizance and says that retrospective amendment has been made in 17(5)(d), and it says that now there is no confusion. The intention is clear that the credit is not allowed in that case. Okay. So now the plant or machinery, that or word has been substituted by and one explanation has been added, explanation 2. It says that it is hereby clarified that notwithstanding anything to the contrary contained in any judgment, decree, or order of any court, tribunal, any reference to plant or machinery shall be construed and shall always be deemed to have been construed as plant and machinery. So this retrospective amendment the government has done, and this explanation clearly says that it is deemed to have been construed as plant and machinery. Okay. So now the air is clear, everything is plant and machinery, so the credit is not allowed. But let's see again what the Honorable Court says. But in Act, this amendment has been done. Now there is another case of penalty. Earlier, other than section 129, there was no pre-deposit in case of filing of appeal regarding the orders where only penalty portion is there. Okay, suppose any order has been issued to you where tax, interest and penalty are there. While filing the appeal, only 10% of the tax portion was required to file an appeal. Suppose there is an order where only penalty is confirmed. There is no tax and interest portion in the order, only penalty is confirmed. Earlier, while you were filing appeal, there was no pre-deposit amount in cases where only penalty is imposed. But now the act has been amended and they are saying that it is proposed to be amended that in cases where only penalty is available in the order and you are filing an appeal against that penalty, against that order, then 10% of the penalty amount is to be paid by you. Earlier, this provision was only for section 129. See, if on your screen you can see the amendment to 107. It was said that provided that no appeal shall be filed against an order subsection 3 unless a sum equal to 25% of the penalty. Okay. Here, if penalty ke liye, it was provision was there and that was 25%. But now there is a uniformity. There is no 25, only 10% in section 129 also, and in any other case also. If there the order demand order contains only penalty, then only 10% of the pre-deposit you have to make for penalty also. And if you see it for tax portion, there was an upper limit. Okay, if you see the sixth amendment to section 107 6b, a sum equal to 10% of the amount of tax in dispute arising from said order subject to maximum of 20 crore rupees. Okay, now in this proviso there is no upper limit also. Okay, so there might be some change when the final finance act comes, but up to now there is no upper limit also. So that might be difficult for trade also, that when now, because it is additional that pre-deposit amount, and further there is no upper limit also. For tax there was upper limit of 25 crores, but now for penalty there is no upper limit. So that can be suggested to the board, citing that this upper limit might be there. Okay. Then accordingly in section 112 also, that tribunal ke appeal ke liye, there also that 10% of the penalty is paid as pre-deposit. Okay. Now this track and trace mechanism that was discussed in the last GST council meeting, for evasion prone commodities like this tobacco products or pan masala, or we can say scrap also there, but scrap ke liye it might not be there. The government, it's now there is a new section 148A. Section 148 is special provisions. The government may use special provisions. So now 148A, this is also a special provision. So 148A says that the government may, on recommendation of council by notification, specify there are two things. One is the goods, other is the person or class of persons who are in possession or deal with such goods to which the provision of this section shall apply. Okay. So there are two things. It is applicable on goods also, or on the persons also who are dealing in such goods. It says that the government may, in respect of the goods referred in this clause, provide a system for enabling affixation of UIM, that is unique identification marking, and it is defined downwards. You can see section 2116A, it is introduced now. Unique identification marking means a unique identification marking referred to in this includes a digital stamp, digital mark, or any other similar marking which is unique, secure, and non-removable. Okay. So the government may prescribe for this unique identification marking for these goods and for electronic storage and access of information contained therein through such persons as may be prescribed. So the government, by way of notification or recommendation of the GST Council, may notify this that these goods are there where UIM is required and the electronic storage is required, and that information is to be accessed. Okay, and prescribe the UIM for such goods, including the information or what information is to be recorded and that in that marking, because it is a digital stamp or digital mark, so it will contain some information. So what information should be stored, that is also mandated here. Now, the person referred to in subsection 1 shall affix on said goods or package a UIM containing such information, that UIM is to be affixed on the package or on the goods, both on the packet also, on the goods also. Furnish such information in detail within such time. So there might be some new kind of form where they have to furnish such information, and the furnish details of machinery also installed in place, manufacture of such goods in like this SRM. You are many of the taxpayers, they are for pan masala, this one form they are filing SRM 1, SRM 2, that is for machines. Okay, so
Because your voice is not audible because some.
Thought that was only me. Can anyone not hear him?
We are not hearing. We are unable to hear.
I think problem in his Vikas system, ma'am. I think any internet connectivity, any issue.
But it shows as a green only. It is on. Please call Mr. Vikas Kumar and check. Yeah.
We are checking with Vikas what is the issue. Kindly give us a minute.
Because unmute your mic. Because unmute.
Ebenezer ji, till Vikas is coming back online, I can check a few comments in the chat. Vikas, are you there?
But he is there, ma'am. But his voice is not audible, ma'am. That I think is
No
because you
problem.
unmute your mic.
Till we resolve that, I was looking at a few comments on the chat. Mr. S. Prakash has talked about amendment. Okay, how exactly does it affect the trade and expense industry? Advantage and disadvantages may be explained. So, Mr. Prakash, I will speak specifically in respect of customs. The main changes that have been done are that our tariff lines have been reduced, our tariff rates have been reduced, and our tariff has been made simpler. We have reduced around 7 lines so that now only 8 different rates are there. So that helps in much better simplicity in understanding our tariff and presenting the rates.
Hello. Okay. Sorry, there was one disturbance. So where we were at track and trace mechanism for certain goods.
Yeah, now you are audible now.
Yeah. So this track and trace mechanism we were going through, and where certain goods or certain people or certain person are required to comply. So now what if a person fails to comply with this track and trace mechanism? It says that now there is one more section 122B has been inserted. It says that it starts with a non-obstante clause again, notwithstanding anything contained in this act. Okay. So it is very strong section. It says that. So it says where any person referred to in clause B of subsection 1. So subsection 1 of 148, it says that persons or class of persons who are dealing in such goods. So it says that if such person acts in contravention of the provisions of the said section, then he shall, see, you read it, in addition to any penalty under chapter 15 or provisions of this act. That penalty is separate. In addition to that, another penalty equal to the amount of 1 lakh rupees or 10% of tax payable on such goods, whichever is higher. Okay. So it is very strong section, and it is saying that any other other than in chapter 15 penalty provisions are there. In addition to those penalties, one more penalty will be imposed on that person if he fails to comply with the track and trace mechanism. Okay. So the people who are dealing in those evasion prone commodities, they have to be very compliant to this section 148A. Okay. Now there is an amendment in section schedule 3. Schedule 3, it says that activities or transactions which shall be treated neither as supply of goods or nor a supply of services. So there is another amendment in schedule 3. It says that after 8A, it says that supply of warehouse goods to any person before clearance for home consumption. And there was an explanation under there, explanation 2. It said that for the purpose of paragraph 8, the expression warehouse goods shall have same meaning as Customs Act. So earlier this was the provision. So now what was the confusion, that what if there is a supply of goods within the warehouse of SEZ or free trade warehousing zone? So there was a confusion, should it be treated as a supply or not a supply? So now the government has clarified it by adding another clause 8AA. It says that supply of goods warehoused in an SEZ or in a free trade warehousing zone to any person before clearance for exports or to domestic tariff area. So if there is supply of goods within a warehouse, it is either in customs bonded warehouse or an SEZ or FTWZ, the supply will not be treated as a supply of goods or services. Okay, so it has been clarified now. And the definition of SEZ, free trade warehousing zone or domestic tariff area, shall be taken from Special Economic Zones Act, SEZ Act 2005. And the definition of warehouse goods is taken from Customs Act. Okay. Now there is one more last clause is there in the finance bill. It says that no refund shall be made of all such tax which has been collected but which would not have been so collected had the above amendment been in force. So this, because earlier there was no clarity, if the proper officer raised a demand stating that there is a supply within that warehouse and it is taxable supply if any tax has been collected. So the government says that there will be no refund of that tax. Okay. Now there is one amendment related to service tax also in Finance Act 1994. It says that special provision for retrospective exemption from service tax in certain cases relating to reinsurance services provided by insurance companies under this scheme, weather-based crop insurance scheme and modified national agricultural insurance scheme. It says that there is a retrospective exemption. Retrospective exemption is given, so now there will be provision of refund also. So it says that section 66 of chapter 5 Finance Act or 66B, now it is omitted after GST Act. It says that no service tax shall be levied or collected in respect of taxable services provided or agreed to be provided by insurance companies. So it is saying that there is no service tax. Now if there is no service tax, they are saying refund shall be made of all such service tax which has been collected but which would not have been so collected if there was this amendment. Now, provided that an application for claim of refund shall be made within a period of 6 months from the date on which finance bill receives the assent of president. So now, if there are many tax consultants are connected to us, so if there is any client of yours who was providing these type of services earlier in service tax regime, so now the exemption has been provided. So you can file a refund application for that service tax if you are having that record and everything. So this mechanism will be there, and within 6 months from the this finance bill gets the assent of president, from that date within 6 months you can file an application for refund of that service tax. Okay, now to understand the omission of said chapter, the provision of said chapter shall, now that chapter has been omitted after GST, provision of GST, now it says that the same provisions will apply for refund also. Although it is omitted, but the same provision is applied. Now, this section says. So now the proposals for amendment in Customs Tariff Act 1971. See, in tariff there are so many proposals are there. So we can if we can discuss every chapter wise, but it is going to take more than 1.5 hours. So I'll just quickly take you through the major changes and we'll see what are the changes. See, key highlights are there that rationalization of tariff rates is there. Okay, so there 7 tariff rates have been removed earlier in the last budget. Also 7 tariffs were removed. Now 7 more are removed, and totally now there are only 8 tariffs are pending. Okay, and then proposal is there for not to levy more than one cess or surcharge. therefore, it has been proposed to exempt SWS, that is social welfare surcharge, on 82 tariff lines that are subject to SS. So that is available in the notification. So that major changes I am taking here. Now there is relief on import of drugs or medicines. There are many cancer or life-saving drugs. On that, the government has provided relief. Okay. Now it has been proposed to add 36 life-saving drugs, including the cancer drugs and medicines, to the list of medicines fully exempted from BCD. It has also been proposed to add 6 life-saving medicines to the list, attracting less, that concessional custom duty of 5%. Other than that, specified drugs and medicines under patient assistance programs run by pharmaceutical companies are fully exempt from BCD, provided the medicines are supplied free of cost to the patients. Okay, this condition is there. Okay, so therefore it has been proposed to add 37 more medicines along with 13 new patient assistance programs. Then domestic manufacturing and value addition support ke liye, now there are major changes in critical minerals. So earlier in last budget also some changes were introduced. Now cobalt powder and waste and scrap of lithium ion battery, lead, zinc and 12 more critical minerals are fully exempted from the duty. For textile, now this technical textile, it has been proposed to add 2 more type of settle-less looms. For machinery ke liye, they are giving exemption, and it has been proposed to revise the BCD also on knitted fabrics covered by 9 tariff lines from 10% or 20% to 20% or 115 kg, whichever is higher. So it is available in the notification also. Further, in case of electronic goods, in line with Make in India policy, and to rectify, see, there is an inverted duty structure problem in electronic industry. So it has been proposed to increase the BCD. So because inverted duty structure is there, so that why they have to increase the BCD on interactive flat panel displays from 10% to 20% to overcome this inverted duty structure problem, and reduce the BCD to 5% on open cell and other components. Further, in 23-24 budget, already open cells of LED TVs or BCD was reduced. Okay, to further boost the manufacturer, the BCD on these parts is now exempted. Then lithium ion battery, because now EV industry is booming. So the list exempted capital goods, it has been proposed to add 35 additional capital goods to EV battery manufacturing. Okay, exemption is provided for capital goods, and 28 additional capital goods for mobile phone battery manufacturing also. So this is going to boost our domestic manufacturing. Then shipping sector also, it is proposed to continue the exemption of BCD on raw materials for further 10 years. And in telecommunication industry, it has been proposed to reduce the BCD from 20 to 10% on carrier grade Ethernet switches to make it at par with non-carrier, because to make them similar, it has been introduced to 20 to 10%. For export promotion, handicrafts ke liye, the export time limit extended from 6 months to 1 year plus 3 months extension, and 9 new handicraft items are added to the duty-free input list. Everything is available in the notification also, and we can see I have added the chapter list also, so you can go through the PPT also. Then for leather industry, that crushed leather 20% export duty removed for the small tanners, and wet blue leather is fully exempted. Then frozen fish paste BCD reduced from 30 to 5%, fish hydrosilate BCD reduced from 15 to 5%. So these are major changes. Now there is one change in customs rule also, IGCR. They are being amended to increase the time limit for fulfilling end use from current 6 months to 1 year. Okay. Similarly, in central excise duty also, like central excise duty on sale of unblended diesel. So earlier it was deferred up to. Earlier there was some exemption. Now this exemption is being deferred up to 31st March 2026. That additional duty, excise duty of 2 rupees, will not be levied up to 31st March 2026. Okay. So now chapter wise also I have put up in this PPT. We will share this PPT with you, so you can see what are the major changes if you are dealing in such goods, because it is going to take much time. So if any further like particular question is there, we can discuss here regarding this tariff change. Okay. Now I hope I have discussed everything. If anything is there, you can ask your doubts here. Thank you. Abnel sir.
Thank you, Vikas.
Thank you, Vikas.
And Ebenezer has already mentioned in the group
Chat box.
that if there are any queries, they can put in the chat box. While they do, I just wanted to take the earlier question which spoke about what is in it for us. So I will discuss the customs portion. GST portion has been discussed in the earlier webinar when we discussed the updates in the 54th GST Council meeting. Basically, there have been tariff changes and non-tariff changes. The whole idea looking at the budget seems to be that the government has tried to make it easier for the taxpayers to comply and remove the uncertainty. The three main non-tariff changes that have happened is, one is fixing a time limit to the provisional assessment. So now there is a lot more certainty if you have applied for provisional assessment, or if for whatever reason customs officers have put your goods for provisional assessment, there's a specified time limit of 2 years for those goods to be finally assessed. So that will remove the uncertainty from the assessment part and revenue collection part. If there are certain exemptions to it, there are, like we used to have cases in call book in excise and service tax. Similarly, there are 4 exceptions where the provisional assessment can continue to be done beyond 2 years, where there's a similar case pending in the court of law, or if the board has specifically asked to keep off, or if there is any information required from a foreign party, which might take time. So other than those reasons, provisional assessment has to be done within 2 years. That is one major non-tariff change that has happened. The second one is the import of goods at concessional rate duty. The concessional duty rules have been changed for 2 major things. One, earlier end use condition used to be for 6 months. Now it has been extended to a year. And second, earlier monthly statements had to be given. Now those statements have been made quarterly. The third change, non-tariff change, has been that the settlement commission is on its way to be phased out, which is why an interim board has been made, which will take up applications which are currently pending, and in a phased manner this would be getting out. So these are the major non-tariff thing. Now, one of the focus of government in this budget has been on exports. So they have given a lot of benefits to MSMEs. Most of them pertain to the credit lines, etc. In respect of tariff changes, I'll speak. One has been to reduce the export duty on crushed leather. Then we have already spoken about rationalization of our tariff structure. So 7 tariff rates have again been reduced, making our effective tariff rates to be 8 in number, including the zero rate. It has also been decided that not more than one cess would be applicable on any particular product. So the duty structure has been changed to remove SWS on a number of tariff lines. Then there are the Comprehensive Economic Partnership Agreement with UAE, that whatever had taken place in that agreement, that has been given effect to through notification 8 of 25 of customs. We already discussed, Vikas discussed, that drugs for supply under patient assistance program run by specified pharmaceutical companies have been exempted from BCD. More number of drugs and more number of programs have been added to that list. In terms of inverted duty structure reduction, as was discussed by Vikas, interactive flat panel display, the rate has been increased from 10 to 20%, but the components of it, the rates have been reduced. It has come to 5% for open cells. PCBA of interactive flat panel displays are at 15%, open cells are at 5%, touch glass sheet is at 5%, touch sensor PCB is at 5%. So the idea is to remove the inverted duty structure and promote domestic manufacturing by reducing the duty on inputs required as compared to the finished good. Thereafter, another change has been, sorry, just give me 1 second. Yes. Thereafter, we have added capital goods to the list of capital goods which are exempted from BCD for manufacturing of lithium-ion battery for mobile phones and for EV vehicles. So these are some of the major tariff changes. Now let me just go through rest of the questions. Mr. S. Prakash has written, accepted that wrong drafting is good at 3:35. I'm not really sure what that is alluding to. And also at 3:34 p.m., Mr. S. Prakash has written, if
Sir, I
the
invite that this one, ma'am.
yes,
Sabhabadi.
please ask Mr. Hegde also to join in.
Yeah, ma'am. I will invite, ma'am. Thank you, Vikas, for your detailed presentation. I am sure that majority of the doubts in the minds of our audience are cleared with the presentation.
Thank you, sir.
Now we will move on to the question and answer session.
Yes, sir.
To proceed with question and answer session, we have with us Ms. Rakshana IRS, Joint Director, DGTS BZU, and Sri Sabhabadi Hegde IRS, Deputy Commissioner, Bengaluru Audit 1 Commissionerate. We thank you for your gracious presence on this occasion. Now let us look at the questions in the chat box. Ma'am, now we will see the question from one by one from the chat box.
Yes.
Yes, ma'am.
So there is one question at 3:34. One comment at 3:34 by Mr. S. Prakash, which says, if the government nullifies the effect of apex or high court orders, what is the use of appeal under GST? I'm not sure which part are you referring to, Mr. Prakash. If you could elaborate that, then that would be helpful. Now, there's a request for presentation that we can share. How shipping industry is benefited in this budget. The exemption available for shipbuilding for several products has been increased for further 10 years now. So that is a benefit. As of now, in lead, scrap is duty free. So a number of wastes and scraps, the duty has been reduced from 5% to nil in the tariff. This includes tin waste, tungsten, molybdenum, tantalum, cobalt, bismuth, bismuth alloy, zirconium, antimony, beryllium, rhenium, and cadmium. Can we get this PPT to check various items of customs? Yes, you can get the copy of presentation, but even more useful would be if you could go to the indiabudget.nic.in, and there if you can check the JSTRU's DO letter that gives you chapter-wise changes for the indirect taxes. I will request Kishore to also include a copy of that DO letter when we send a copy of the presentation. So all those who have made the request for presentation copy, we can share that DO letter. So it will be useful to go to India Budget for the DO letter, which gives us chapter-wise details. Can you please let us know about the reduced duty rate for HSN 0304? BCD from 30% to 5%. Just give me 1 second so that I can look at this particular. Yes. So this is frozen fish paste used for manufacturing of surimi analog products for export. The BCD rate has been reduced from 30% to 5%. Ice Gate still showing old rate. When see, notification has already been issued. Notification 5 of 25 has already been issued, and it is with effect from it is with effect from 1st February. So I'm not sure. There might be some error there. We can check, or maybe they've. I will have to check. If you could share a screenshot or something where this is still showing the old rate, that will be helpful, because I have seen that the notification 5 of 2025 has been issued, which has reduced the BCD rate from 30 to 5 for 0304 9900. Chapter 64, BCD reduced from 35% to 20% effective from 1st May, whereas regarding AIDC, 18.5 clarification is required whether Ms. Bhanumati at 4 o'clock. To your question, let me answer. All the tariff changes are effective from 1st of May 2025. But this AIDC application, this is through notification 6 of 2025, which is with effect from 2nd February 2025. So AIDC will be applicable at least till then, unless any changes happens from 1st of May 2025, which is when the new tariff rates would be in place. Mr. Mahesh has asked whether the amendment to section 107 so far as payment of pre-deposit of penalty is concerned. May I request Mr. Hegde to look at this question? I have not looked at the notification in this respect. Either Mr. Hegde or Mr. Vikas can look at the question by Mr. Mahesh at
Yes, madam.
359.
Regarding this is actually regarding the pre-deposits to be done in appellate authorities level for the cases where only penalty is demanded. So it is as far as this now actually proposed effective date is not yet mentioned. It is clear, and that what actually Mr. Mahesh is asking is whether the amendment to section 107 is applicable or consent applies to orders returns filed before the date of proposed amendment. I think Mr. Mahesh, I think it's again this one, what I understand is the date of implementation is not yet announced by the government as of now. When the budget is passed and the effective date will be announced, till such time the earlier existing provisions will run. So it is obvious that it is not applicable to this one unless it is made retrospective. So as of now, what is running, that is applicable for filing the orders or returns there. I think it explains.
Thank you, Mr. Hegde. Then Mr. Prabhu has asked the process for amendment of shipping bills. The process of amendment of shipping bill has not changed. I believe you're asking that you need to change your shipping bill from DFIA to drawback shipping bills because lead has been made duty free. But just to clarify, this tariff change is prospective. And if your goods have already been cleared, because you're talking about shipping bills all 4 months old, then I am not sure what would be achieved by amending those shipping bills since these tariff changes are prospective in nature. Thereafter, I am looking at Mr. Utsav Baisani, who I think has elaborated on earlier query of Mr. S. Prakash also regarding plant and machinery. So it's not nullifying the judgment. I would beg to differ in this aspect. It is just that Supreme Court took into account plant or machinery and the government's intention was probably not that. I cannot comment on the policy aspect of it, but maybe the government has just brought in their intention much more clearer by making the amendment and making it plant and machinery instead of plant or machinery. Mr. Manoj has asked, please clarify AIDC is applicable imported under CEPA and AIFTA. It would be there in the effective rates. As far as I remember, they were not, but I will have to look at the latest notification for CEPA. I'm sorry, I do not have access to the notification right now. I am not able to access my computer right now, but I believe AIDC and SWS were also not applicable for most of these tariff lines. You will have to look at the relevant notifications, which in this case is notification 8 of 2025. So you can just look at the header of that notification and you'll be able to see exemption extends to only BCD or BCD as well as AIDC. Do we have more questions? Ebenezer ji?
No further questions, ma'am. Sir, ma'am. All the questions we have answered now. Now one Mr. Prabhu at 410.
Yes, I'm looking at the chats and I'm also looking at the link where they're saying you can check duty rates. It says old.icegate.gov. So I'm not sure whether it's the current. Zero 03049900. Mr. Mohit, it's taking some time to load, so I'm not able to see what is the rate that it is showing, but it should have been reduced to 5%. Maybe it's, I see in the name of the hyperlink, it says old.icegate, so maybe that's not the most updated one. Mr. Prabhu has asked, I've missed some shipping bills RODTEP claim, but can I make this amendment for, there's nothing that has changed with respect to amendment of shipping bills in this budget. So you can request for amendment. But if your bills have already been cleared, then it will be section 149 amendment. So that requires the documents that proves the applicability of RODTEP on your exports.
All the questions were answered, ma'am, now.
All right. Thank you. Ebenezer ji, may I request that all the presentation requests that would come kindly include the JSTRU DO letter with them. That will help
ma'am.
everybody
I
get a
was-
sense of
Yeah, ma'am.
chapter-wise changes.
Yes, ma'am. I have sent that to our Kishore also, ma'am. We will send, ma'am.
All right, then. Thank you. Hopefully this has been a fruitful discussion. And if we still have any questions, you can email them to us at DGTS. The tariff changes in customs have been a lot, so taking chapter wise or notification wise would not have made sense. However, they are very clearly spelled out in the DO letter. If you still have any confusions on that, you can please get in touch with us over our email.
Okay, madam. I hope all your doubts have been clear. Now it is time to give vote of thanks. I request Sri Girish Narayanan, Honorable Secretary, BCHAL, Bengaluru, to propose vote of thanks. Over to you, Mr. Girish. Girish. Over to you, Mr. Girish.
Sir, am I audible?
Yeah, you are audible now.
Yes, sir. Good evening all. So as we draw towards the close of today's session, I have been provided with the task of proposing the vote of thanks. So I hereby thank Sri Amar Kumar Sinha, IRS Additional Director General of Taxpayer Services, Bengaluru Zonal Unit, for undertaking this wonderful session on an important and impacting topic, which is very beneficial to our trade. So DGTS has time and again done a very commendable job, which has been impactful to the entire trade. Thank you, sir. I thank our guest speakers, Sri Prakash Iyer, Managing Committee Member, CC and I, Kerala, Sri PR Kurundwad, President Taxation Committee, TDCCI, Tumkuru, Sri Babu Ganesh, State General Secretary, ATP, Kerala, Sri Philip CC, President, Mangalore Custom House Agents Association. Hearty thanks to our topic speakers and expert panelists for providing the valuable inputs and requisite clarifications to the trade on the recent budget updates in customs, GST, service tax, and central excise. I thank our speakers also, Sri Rachna Ma'am, IRS Joint Director, DGTS Bangalore Zonal Unit, Sri Vikas Kumar, Superintendent, Shumaga Division, Mysore CGST Commissionerate, Sri Sabapati Anegde, IRS Deputy Commissioner, Bangalore Audit Commissionerate, for all the valuable inputs which have been provided. Special thanks to Sir Ebenezer Sir, IRS Assistant Commissioner, DGTS Bangalore Zone, and all officials of DGTS Bangalore Zone for the wonderful and commendable achievement which has been done across by your end. So thanks for imparting knowledge to the trade. This has been a very wonderful session, sir. Special thanks to our members of our Federation, FFI, FIO, FICCI Kerala, CCI and I Kerala, Bachal, MCHA, ATP Kerala, and TDCCI Tumkuru. Thank you very much. Thank you very much, sir.
Thank you, Mr. Girish. Now, with the permission of the chair, I declare the session is closed. Thank you, one and all, for your kind presence. Thank you.
Thank you, sir.
Thank you, sir. Thank you. Thank you very much.